Hi everyone, a warm wishes to one and all. Myself, Manju Kainal, a research scholar at Bharatmata College, Trikakara, and the other contributor to this paper is Dr. Tessy Thomas, Assistant Professor, Bharatmata College, Trikakara. And the paper is titled as Payment Banks, Game Changer in the Indian Financial System. Introduction. As per the IMF report, India is the fifth largest economy in terms of nominal GDP. Financial inclusion is an imperative component which contributes towards the sustainable development of the country. Financial inclusion means delivering basic financial products and services to the disadvantaged sections of the society at lower cost. Government has taken several measures to provide financial services at low cost. The recent changes in the telecommunication sector is helping the banking sector in this direction. As per the report of TRI, India is the second largest market in the world by number of telephone users with 1.053 billion subscribers as of 2016. As per a 2015 report, 18.21% of the Indian population have smartphones while 77% of the population have mobile phones. Technology based initiatives rather than brick and mortar model can be used for achieving the goal of financial inclusion. In the year 2014, RBI introduced payment banks based on Kenya's M-Paisa payment bank to achieve financial inclusion in the country. Nachiketa More Committee recommended the establishment of specialized banks called payment banks to increase the penetration level of financial services in the rural areas. The focus was on the low-income households, small businesses, and migrant laborers through a secure, technologically driven environment. Payment banks provide a technology based platform to easily reach all the sections of the society without having a physical existence, thereby making it possible to overcome, to some extent, the difficulties faced by the traditional commercial banks to reach all corners of the country. Payment banks are becoming a game changer in the financial sector by using a digital technology to reach the people for the purpose of providing basic financial services. The purpose of payment bank is to deliver financial services to all sections of the society and digitalize those transactions. Statement of the problem. The payment banks were introduced in the year 2014 as a digital platform wherein smartphones are used as a medium to deliver the financial products and services to the consumers. Traditional commercial banks are considered to be the major players in the Indian financial system, and hence they had to play a significant role in financial inclusion. But the extension of branches towards rural areas was a major constraint. That was an obstacle for the delivering financial products and services to the weaker sections of the society. Payment banks provides a permanent solution for this challenge because it provided access to financial services through a digital platform which could be accessed through handheld devices like mobile and laptop. Payment banks would provide a supplementary role in rural areas and would create a competitive environment in the urban areas for the commercial banks. Hence, it is necessary to analyze and compare the payment banks and commercial banks. It is necessary to study the role, concept, and working mechanism of payment banks in India because initially, when payment banks were established, there were a total of 11 payment banks, but now only 4 are in operation, namely Airtel Payment Bank, India Post Payment Bank, Fino Payment Bank, and Paytm. The reasons for the closure of 7 payment banks must also be analyzed. Objectives of the study: to analyze the working mechanism of payment banks in India, to understand the different roles played by payment banks in India, to compare and differentiate the traditional banks with payment banks. Research methodology. This is a review paper. So the main sources of information were RBI reports, newspapers, journal articles, and other online materials. And the secondary data is used for the analysis purpose. Review of literature. From the literature, it can be summarized as payment banks are based on a business model which is directed towards improving financial inclusion by focusing on disadvantaged sections such as migrant laborers, small businesses, low income households, and other unorganized sectors. The payment banks have its own unique features than traditional banks. The previous studies reveals the features, advantages, opportunities, and challenges of payment banks. So it is mandatory to study the role of payment banks in traditional banking system. Results and discussion. Payment banks and its operational mechanism. Payment banks were introduced by RBI as a new initiative to contribute to the growth of financial inclusion in India. In 2015, the RBI gave in principle licenses to 11 entities to start payment banks. Out of 11, only 4 were functional now. The model of M-Paisa is followed in India. And the recommended targeted groups focusing are low income households, migrant laborers, small businessmen, and people from unorganized sectors. Traditional banks focus on middle class and urban population and gave less attention to the vulnerable sections. But the payment banks, on the other hand, focusing on the disadvantaged sections of the society. The unique feature of payment bank is that it works on digital platform and substitute the brick and mortar bank model for making financial transaction. It accepts deposit but does not provide loans or grants. The major deposit schemes accepted by the payment banks are savings and current deposits, and the maximum deposit amount is up to rupees 1 lakh per customer, and it never accept any NRI accounts. And the payment banks are under the purview of RBI Act 1935, Banking Regulation Act 1949, Payment and Settlement Act 2007, and Foreign Exchange and Management Act 1999. The important services that are availed through payment banks are payments, deposits, receipts, internet banking, issue of ATM and debit cards, distributing financial products like mutual funds, insurance products, and also various welfare and subsidy schemes of government agencies can also be linked to the accounts of beneficiaries in the payment bank. And it is working on internet, and hence it has an access at any time with reliability, and it is majorly focusing on high volume low value transaction, and it is much easier when compared to NIFT and IMPS. The payment bank is a new model suggested by RBI which accept deposit and does not grant credit to the targeted population. So it is difficult for payment banks to have a high margin of profit in the initial stages. The reason for failure of many payment banks is this unfeasible business model. The primary source of revenue of payment banks are transaction fees. But for the traditional banks, the major source of revenue is interest arbitrage. But for the payment banks, it does not provide any kind of loans and advances. So it is not possible for the payment banks to generate revenue out of interest arbitrage. But for payment banks, it is mandatory to deposit in government securities. So the interest amount received from such deposit is also a source of revenue. The payment banks work on mobile phones, which ensures wider reach and acceptability. It is easier to establish an operational system with mobile phones than constructing physical branches in remote areas. The operational costs are less for payment banks. Hence, it is possible to provide the basic financial products and services to a wider community. The major hindrance confronted by the traditional banking system is the accumulation of non performing assets. But for the payment banks, it arises the problem of NPA as there is no credit risk. Then, next one, the role of payment banks. Payment banks are an innovative business model which suits the developing economies like India to meet the financial inclusion. This business model has some unique feature which enables it to reach out to the vulnerable sections. This digital platform can be easily accessed by the unbanked and underbanked population because it is free from a number of traditional constraints. Even though the payment banks extend financial services to the geographical areas where the traditional banks cannot reach, payment banks can never be substituted for traditional banks. Therefore, It is pivotal to discuss the unique role of payment banks in Indian economy. First one, the payment bank act as a vehicle to bridge the gap of financial inclusion. A number of initiatives have been taken by the Indian government in the past to enhance the financial inclusion, but those initiatives were not able to embrace all the sections of the society. One such initiative was the Pradhan Mantri Jan Dhan Yojana, which helped in opening bank accounts for people in remote areas. And it increased the number of total bank accounts accessed by the Indian population. But it was soon realized that mere opening of bank account never contributes to the volume of financial inclusion, as in most of these accounts there were not transactions. Hence, the government came up with the concept of payment banks. Payment banks work through mobile phone with internet connectivity. In the recent times, the usage of mobile phones by the people in the remote or rural area have tremendously increased. Payment Bank seeks to make use of the increased digital connectivity in rural areas for improving the financial inclusion. The low operational cost and less legal constraint make this model more viable. Unlike any other digital platform, the main advantage of Payment Bank is that it provides interest for the deposit made by the customers. And second one, it acts as a business correspondent to the existing banking system. The major function of the traditional banks are to accept deposit, grant loans, and perform some utility and agency services. When these services are extended to the remote areas using a brick and mortar model, it increases the operational cost. This is because the volume of financial transaction per customer is low in rural areas. Hence, it is impractical to open a physical branch in remote areas for extending financial services and products. The internet banking supported by traditional banks has not reached the customers due to several technical issues. The payment banks can hence complement the existing traditional banks. Instead of constructing physical branches in the rural areas, the payment banks via mobile phone can function as business correspondent for the existing traditional banks. Since the payment banks cannot grant loan or credit, it can act as a business correspondent of the traditional bank to provide all the financial services. And it acts as a competitor to the existing banks. The payment banks provide all the basic financial services except granting loan. It targets the customers who can deposit up to rupees 1 lakh. So it focuses on people who prefer savings than current account. It thus creates competition to the traditional banks and reduces the customers of traditional banks, particularly in urban areas. Public sector banks have the problem of NPAs, which payment banks do not have. The average rate of interest for serving accounts of public sector bank is only 4%, while that of payment bank is 6 to 7%. This attracts the customers of public sector banks to opt for payment banks. So the low operational cost is the added advantage of the payment banks over the existing banks. And next one, it is an innovation in the mobile banking system. The most important innovation in the traditional bank system in recent times has been the advent of mobile banking system. The customers need to have a bank account which is linked to their mobile phone by an application which is web based. Operation of payment bank is similar to mobile banking with restricted features. Payment banks are preferable over prepaid instruments as they offer interest on unused money which is retained in the account. And it is evident from the graph that the payment banks can capture the market and its usage are increasing. And next one is how to differentiate the payment banks from the traditional banks. Both the payment banks and traditional banks provide deposit facility, and the traditional banks provide four types of deposit: savings, current, term, and recurring. But the payment banks provide only two types, that is savings and current account. And there is no amount restriction in the traditional banks, but there is restriction with payment bank, that is up to 1 lakh rupees per customer. And both the banks provide interest on deposits, and the payment banks never provide loans and advances while the traditional bank do so. Both the banks issue checks, debit card, and ATM, but the payment bank does not issue credit card. Both the banks have grievance cell, and the payment bank never accept NRI account. As traditional banks are on a brick and mortar business model, payment banks are on click model. While coming to the conclusion, it can be said that creation of payment bank is one of the most important initiative taken by the Indian government in the banking sector in the recent times. The major hindrances of the traditional banking sectors are the issues of NPAs and lower level of financial inclusion. To overcome the problems related to NPA in the remote areas, small finance banks were established by RBI. Similarly, for the purpose of addressing the issue of low level of financial inclusion, RBI permitted the establishment of payment banks. The payment banks are operationalized via mobile phones, and since the usage of mobile phones among the rural people is increasing, it can reach the bottom of the pyramid of the population. Payment banks provide basic financial services and products to targeted people such as migrant laborers, low income households, small businessmen, and other unorganized sectors. But the payment bank cannot substitute for the traditional banks and it does not provide credit and other financial services to the customers. So the payment bank can complement the traditional banks to the extent the functions in the areas where the traditional banks cannot operate. For payment bank to be successful, it is necessary to create awareness among the underbanked or unbanked population about the need to be a participant in the Indian financial system. Thus, the payment bank can be a game changer in the Indian financial system. Thank you.